Hello, everyone, and welcome back to episode 27 of the Nord Search podcast, where we speak to leaders in the power trading industry. I'm really happy today to be talking to a true power trading leader in Europe, someone that I actually have spoken with right at the start of this podcast journey, I think 18 months ago. He was one of the people that was on my list, and we've been talking ever since. So really happy to be joined by Amani Joas from FlexPower. So Amani, welcome to the podcast. Finally, thanks for your time.
Thank you very much, Patrick. Super happy to join. Glad to be here.
Yeah, no, like I say, we've seen each other at conferences. We've had some meetings in the past, and yeah, look, I've been super impressed with the journey that you guys have been on at FlexPower. You started 3 years ago.
3 years ago, yeah.
Yeah.
It's actually it was our third birthday yesterday.
Nice. Happy birthday, FlexPower.
Thank you very much.
We can talk about that journey and
Sure.
everything that you've achieved, because like I say, we started 18 months ago, and what I've seen you do in that time has been super impressive as well. But yeah, for those who don't know you, it would be great if you could give yourself an introduction, tell us what you're responsible for, what's on your business card as your title, and we can talk about obviously everything that's happening in FlexPower and the market after that as well.
Sure. Thanks for having me again. As you said, I'm Amani. I'm one of the managing directors and founders here at FlexPower. On my business card, it says C3PO, bit of a Star Wars fan, and I have a hard time taking these C titles very seriously. So
yeah, same
so
for
that's
me.
what we went with.
Love Star Wars.
Exactly. So as you said, we started the business 3 years ago. My background and the background of the founding team, so it's four of us, so we're quite a large team. Is that we build out the trading floor at a company called Nextkraftwerke.
Know them well.
A lot of the listeners will know them. Great company.
Yeah.
So we've been doing this for a while. We started 10 years ago when the intraday market was really nothing like it is today. So there was, a bit of a leftover market for tiny amounts of renewables, and those have grown a lot. And we built out that trading desk. At some point, we had the biggest PV portfolio and biggest biogas portfolio in Germany, and then also horizontally grew out that trading across most continental markets. The focus was also always on the short term. So usually risk positions would start on day ahead, the intraday auctions, and then the continuous intraday, also with a view to imbalance positions and optimizing around those. Something that Next had that many other companies didn't. It's like one of the largest VPPs in Europe. So we had a lot of flexibility in the ancillary markets, mostly negative AFR with the biogas plants. And we're optimizing the trading around this as well, and that experience comes in super handy now with the best explosion that we're seeing. Our old company then, so we were all intraday traders, trading on the same team, sitting on the same desk, trading on a shared P&L, which helps to build trust, because everyone has been in the situation of trading some great days, trading some bad days. So I think it was a pretty tight-knit team. I personally left Next maybe a little over 5 years ago. I was trading for 1 year at Priogen in Amsterdam, and was building out their short-term operations in Germany.
Nice.
And then Corona hit, and I felt like going back home. I'm originally from Bavaria in Germany, and so I went back to Munich, and I was commercial lead power and gas for E.ON. And at that time, Nextkraftwerke got fully taken over by Shell. And a lot of people didn't feel like, it's different if you trade for an energy transition company and feel like that's your life's work rather than making a lot of money for an oil major. So I think with that takeover, and also a lot of new rules and compliance coming in, which the guys weren't used to, they felt happy to make the step. And then our CEO, Max, set up the deal with our investors, who are called CFP Energy. They are a large commodity trading and risk management house based in London. They mostly
Yeah.
come out of the
Know them.
certificate trading space. And they were negotiating a deal. And then I jumped onto this, and was also not super unhappy to leave Eon. Like some people are made for working for large corporations. Myself, I found it a bit slow and tedious at places. However, still there was a great team there, and have nothing negative to say there. But I think I also gathered a lot of experience how different trading teams are managed, and had a pretty clear idea how we wanted to set it up. So yeah, and then we started mid 2022 to get all the regulatory work in, to get like the balancing groups and the market access and all of these things. And we had pretty solid funding also in terms of collateral from CFP Energy, which is very important if you want to build this kind of business. Like our business is just not a VC case, because you need to park a lot of money with counterparties, and VCs just aren't used to that. And CFP Energy comes from the space and have very good understanding of how that would work. And then we were running around conferences late 2022, so in the midst of the energy crisis, trying to get like a start with the renewables portfolio. And many of the big players had, different problems than giving part of their portfolio to a bunch of young guys. But we found some people that trusted us. They're now also our largest customers. And we started with a small portfolio of like 90 megawatt of PV. We've built this out now to 1.5 gigawatts of PV, solar, a bit of hydro, a bit of biomass, and now very much growing is the BESS optimization business. All of our assets are in Germany, and on the BESS side also in Netherlands. So the physical business is still very much focused on those markets. Yeah. And that's what we call the upgrid side. So asset management, anything where power goes into the grid. Yeah. And that's running. And I think now we are a fully established player in that space as well on the BESS side as on the renewable side. We have now it's more companies calling us and asking us to trade their assets than the other way around, which is super nice. Nice position to be in. Yes. And then recently we started building out the downgrid business. So we've become a supplier for large scale customers. So we are pure B2B business. So we like to trade in megawatt hours and gigawatt hours, because that's where we see our strength. And what's in the middle between the up and down grid is our trading platform that is called Power Match, where you can trade standardized PPAs for the renewables and FPAs, so flex purchase agreements for the batteries. We can talk a little bit more about this later. Yeah. But then really what is the heart of our company is right behind me is our trading desk. So these guys are doing what we as the founders did for a long time, which is, trading renewables and batteries on short-term markets and doing the optimization around that. However, you work in the trading space, and I think we're one of the few companies that is very transparent that a lot of our income also comes from our prop trading activity, which is, the market just delivers a lot of opportunity. It's a lot of hard work, but that's where a lot of the value is still coming from. Last thing that we just set up is FlexPower Energy, which is an asset development company. So unlike many others, our strategy is not to be asset light. We actually want to develop and own assets and trade our own assets, because we see a lot of value there. And if you take all of these things together without knowing or planning it from the onset, we've become somewhat of a boutique utility, because we have the full service chain around power. So we deliver power, we produce power, we optimize power, we have the flexibility, and then we do the trading and the hedging around the long term. And so, that's been the journey. We're now 45 people if you include the New Zealand team. The New Zealand team trades the night shift, because we're in a 24/7 power market. Yeah, that's where we stand at FlexPower.
Nice. No, thanks for that overview. Like I say, really impressive, especially when you break it down, what you've achieved in 3 years. the fact that you're already running a successful asset business, and obviously then you're able to do spec trading in Germany, that takes a long time for a lot of other companies that I taught to get to that position. So that's really impressive. But I think it's interesting when you talk about your background. Like I've seen Next Kraftwerker as like a lot of people have been successful from that company. I think it must have been a great place to be part of, to learn, that's more of a startup business than a massive utility that went through a great growth journey.
Oh yeah, definitely. So next, when I joined, I think it was around like maybe 90 people to
Yeah,
100 people. So very
yeah,
much in a scale up phase. Like Next had the advantage of thinking about flexibility and also being deep in the intraday markets when nobody yet really saw the value potential of that. So
yeah,
they were just one of the first movers. And also in terms of culture, was a super open space, hired a lot of
yeah,
people straight out of university.
yeah,
And we figured out the spots in the markets 100% on our own. You would see something in the market and you would be like, is this systematic? Is this something where we can build something around it? So I actually
yeah,
personally, I always love doing analysis as a trader as well. And I think it's
yeah,
actually important for every trader to do a lot of analysis. And then sometimes you spot a pattern and you have a trading strategy. That was usually the process in the manual trading or in the discretionary
yeah,
trading. And then we were also super early to develop our first algos. I think we had our first algos running directly with EPACs or directly connected to MS7 around 2015.
yeah,
And then later on, we went to then called Lecon and had that a little bit more automized and a bit more professionalized.
yeah,
And another thing that I learned at Next was the value of a shared bonus system. I've also seen individual bonus systems, which I very much don't believe in for short-term trading because I think it sets the wrong incentives. And that really gave it a lot of team spirit. And another thing that I think we took from Next in terms of ideas was the setup of the tech team and the trading team to
yeah,
have a tech team super close to the trading floor because
yeah,
traders want things changed all the time. And it's also fun for a tech team to have their customers like the traders super close and be able
yeah,
to develop MVPs very quickly. And I think that's especially where a lot of the corporates are struggling, that developing tech for the trading floor just takes a long time. And we also set it up here in a way that like there's an open Slack channel between tech and trading every day, and every day they're shipping something new. And I think that makes it a lot more fun if you're a trader and can actually, have your ideas seen develop into code and the right dashboards and the right signals and the right algos in a fast manner.
yeah. No, 100%, 100%. Like, so you guys are doing that. Would you class yourselves as like a hybrid approach of you've got that technology, you've got those algorithms running, and then you've got some really strong discretionary traders because that's your background. So you've been able to develop people in that area as well. So you've got a nice blend of both.
Yeah, definitely. So, I mean, our background is all in discretionary trading,
Yeah,
and we're still seeing in the market that, good market understanding, especially in the few extreme days that you have in the year, is the most important thing to have, I would say still. However, on the algo side, this team is now, they work very differently, right? It's a slower process, it's a lot more systematic, and the positions tend to be a bit smaller, the spreads tend to be a bit smaller, but at the same time they run 24/7 at very low costs, and their P&L tends to be super steady. And also when you're looking at asset optimization, especially if you look at something like a battery, like a solar portfolio or a wind portfolio, you can still trade that manually. Like there we
yeah,
have it. Sometimes, we give it to the algo. Sometimes we take it over manually. That's up to the traders. But a best portfolio cannot be traded manually. So, I mean, this for one battery, you make thousands of trades a day, and nobody sits there and puts in price and quantity and clicks around. However, and I think this is where our approach differs from some of the optimizers, on the crazy days, we also have the option to take the flexibility away from the algos and hit a pause button there and take that flexibility into manual trading. And that's been proven to be very, very good for, well, ourselves and the asset owners, because algos just tend to struggle in unforeseen situations. And not that they lose money or anything, but they often just leave out opportunity. And
Yeah.
in that sense, I always say we have like a human algo augmented approach to this.
Yeah, I find that really interesting. And from what I can see in the market, I'd agree that that is, a really good way of doing it. Like you said, with if you want to do batteries, you have to be automated. You have to be pretty sophisticated in that area. So you need data scientists, you need quant analysts. But what you mentioned, which I find really good, is that you have that really skilled trader who's there as well to take advantage of the crazy days. Because when I talk to the market, that's like, yeah, the algos will consistently do their job and it'll run really nice if you do it well. But yeah, those 4 or 5 events in the year which are unplanned, where you've got someone skilled who knows what they're doing, has perhaps seen it before, can just react to it. That's where I hear like the big wins of the year come through that collaboration.
Right. And I think like a classic situation is we just had Easter from, energy transition perspective and grid stability perspective. It went well. So nothing crazy happened because it
Yeah,
was quite cloudy. It wasn't very windy. It just wasn't a high renewables days yet. We still had very, very negative prices.
yeah,
And the logic of an optimization algo will just be to take opportunities as you see them. So in the simplest thing, or in the simplest logic, let's say you have a 1 hour battery, that battery will buy the cheapest hour or the cheapest 4 quarter hours and sell the highest 4 quarter hours.
yeah,
And those might shift around in the market. So you get in and out of positions quite a lot. And with the real option value of the battery, the algo can make money of that. But what is very complicated to tell the algo is minus 150 euro a price that you should buy, or should you wait for something else to happen later, right? And then this might be a situation where a trader says, buying for 150 and going into delivery might seem great to you right now, but this might be a situation which did not occur this Easter, by the way. So this Easter, this would have been the right thing to do. But sometimes it breaks through that barrier, and then you might see a price of, I don't know, minus 4,000. So the benefit of waiting and making use of your real option there is something that, in our point of view, a manual trader still has a better feeling of doing. Obviously, you can program this into an algorithm. Like it's not like you cannot throw a real option pricing formula into an algo. It's just that energy markets are very crazy and unpredictable in these situations. And having the human to say, hey, actually, I'm willing to forego a 50 euro spread or even a 150 euro spread with a surge of like a 2,000 euro spread is just smart in certain situations.
yeah. No, absolutely, absolutely. So for you, then you've got a team of discretionary traders and like algo traders. So do they sit in the same team, or do they sit in separate teams? Like, do they have different focuses? Like, how does it work? And what's your view on that? Like, how it should work?
That's a very, very good question. So they sit next to one another. So this is something I saw at all companies that I worked with, was a bit of a struggle or a bit of a conflict between these teams.
Yeah,
And we try our best to, like, we know this is a conflict. I will explain in a second why I think it's a conflict. But obviously, as a company, you want these teams to work together and talk to one another and exchange intelligence. So, I mean, mostly from the discretionary side to the algo trading side, because the discretionary traders tend to see the algos in operation. And sometimes they can just, like, we, especially in extreme situations, we make money against stupid algos, and you just don't want your own algo to be one of them. So you can really just lean over and be like, hey, why is the algo doing this, and this right now? It really shouldn't be doing this. And then the quant team can figure out how to tweak their closing and opening algorithms to just get a bit better on execution. And also, manual traders or discretionary traders often spot trends where you don't really know if it's a trend. And then algo teams tend to be really good at figuring out if this is actually systematic or not. So that interaction definitely exists, and I think it's working the best from all trading teams that I've seen so far. However, is it sometimes difficult? Yes, and the reason why I think it's a bit difficult everywhere is A, are you going for the same spreads? And if you're going for the same spreads, then you just have natural competition between the teams. Who gets to take which position, who gets to have which limit in which situation, and this is just something that you need to manage. But I think the bigger problem is that they just have, like, they're very different kind of people and they have very different working styles. So for the discretionary desk, the kind of people that we hire, maybe people that often don't know much about energy markets, to be honest. Like, it might be professional Counter-Strike players or professional poker players and have this kind of background where you just have to be good at managing your risk, making quick expected value calls, and also, having a bit of a risk taker mentality, like a rational risk taker mentality in terms of like, I like the spot. I might even not know why I like the spot, but I have the intuition. I've seen this 20 times before, and I'm just going to load up with a lot of megawatt hours. So it's more of a short-term kind of, playful way of approaching your job. Whereas the quant team, like, we have like physics PhDs sitting there, and like all of them obviously know how to code, and their working style tends to be quite systematic, a bit slower. Like, getting them to take risk is often like where a discretionary trader will like tend to jump on the opportunity to take risk. Algo traders, you often have to convince a little bit to take risk. So it's often different personalities and different working styles. And if you did tests, like normal performance tests on math, my intuition would be that our algo team is a lot stronger than the other team. And there might also be prejudices of like, oh, these guys are so and so and these guys are so and so. And being open, like, I think in these situations, it's always important to be open about it, to have fun with it, to, just live that conflict out in the open and get them to cooperate in that way, because it happens very, very, very often that you build silos of teams that then compete, that then don't share information, that compete for tech resources. And that's never healthy. However, it is a conflict that I think is there everywhere and just needs to be managed actively.
Yeah, no, 100%. I think that's where like the magic happens. If you can get those two groups like collaborating, working together, sharing ideas, that's where some of the top performing firms that I'm aware of, because they've got that working well. But it's not easy because of all the challenges that you mentioned there. There's some of the things that I've heard well is when algo traders aren't seen as just support functions for the discretionary guys, where they're able to collaborate and work together, but also they can have two paths as well. Like, the algo traders can trade the same things as the discretionary traders, or one can go against the other one as well. Like, in some environments, I've heard, and these work really well in that. So they're seen as still an algo person is still seen as a trader, but just a different type of trader. But again, they're one team, one, but they're all trying to get this performance to be the best. It's not one against the other.
Exactly. Like, that's a very important point. So, like, our algo team, they're their own team. They have their own P&L, and the responsibility to, create positive P&L. And at the beginning, we had it set up a little bit as you described, that some of the quants on the algo team were also doing a lot of the analysis work for the discretionary team. But we've actually stopped that because we didn't want that feeling at all, that the algo desk was a support function for the discretionary desk. And now the discretionary desk actually got some of their own coders and own analysts that are just working. I mean, a lot of these analysts obviously have the ambition, and that they should have that ambition to become a trader themselves one day. But we split that out, that they have their own analysis support in order for the quant team not to be in the situation that you described, that you're really just like a secondhand citizen and working for a discretionary trader, but that you have your full P&L view on your own.
Yeah, and I think also it provides that career progression as well, which is nice. So, like you say, you could have potentially have someone starting working very closely with a discretionary team, helping them, supporting them, gaining that experience, and then if they do want to go down the path of I want to be a trade algo trader one day, then that transition is a little bit easier, I would imagine as well, and keeps people motivated.
Yeah. Yeah, for sure. And I also like something that we're arguing internally also about is to what extent is it bad if you have double processes on some levels.
Yeah,
And in our experience, it's actually not such a big deal. You know, if two teams are working on something like market making, I think the algo team should be better at this because they're just set up at it more.
yeah,
But if somebody on a discretionary desk comes up with something and maybe it's a rough and dirty solution that's technologically maybe not super sophisticated, but just works and creates P&L, then there's something like, yeah, go ahead, do it, have it running, and then maybe at some point you consolidate it and an algo team takes something like this over. But we also, I mean, oftentimes we double up on shifts and people trade the same market, and sometimes they might have opposing positions,
yeah,
which as long as you don't cross trade and break any rules, I don't have a problem with that at all, because you can have different strategies that can both be profitable with,
yeah.
just a different angle that might have opposing positions in terms of also risk management logic. And for me, that's completely fine.
Yeah, no, absolutely. And you mentioned like the challenge of getting people working together. How have you created a culture where it can work? Those two different types of people
Well,
collaborating and
Well, I
working as a
think two
team.
things. Like, I think the most important, or like, traders legitimately work for bonuses, right?
Yeah,
Like, outside of trading, I'm actually personally not a huge fan of bonuses, because I often think bonuses tend to measure the wrong KPIs, and then people optimize on the wrong
yeah,
thing, because incentives just, they work. I'm an
yeah,
economist. I strongly believe in them. But in trading, they just happen, the incentive happens to be extremely well aligned. Like, you
yeah,
can, for a discretionary trader, it's literally every hour, or at least at the end of every day, how it went.
yeah,
And I mean, also on that point, I think it's important. Like, you can have a losing trading day and you trade it very well. This
mm,
happens. Like, losing money does not always mean you did the wrong thing.
that's
If you're
interesting.
if you're trading on an asymmetric outcome and it just didn't happen, you might have lost money and had a very good day. And in the opposite way, you might have won money and made very stupid decisions and just
Yeah,
got lucky that you weren't, you weren't hit in the wrong direction. But over the course of, I don't know, like at least 3 months in short-term trading, given the fact that you make so many trades and you're in so many positions, and I look at a trader's P&L or look at a team's P&L, I can tell if they were doing a good job or not. So it just reflects performance very well. So on this one, in trading, bonuses work well. And then the question is, how do you structure them? And we are very heavy on team bonuses, and also overlapping team bonuses across the various teams.
yeah,
So there's a pot that just reaches across, and
yeah,
that by itself gives you an incentive to help the other team out, because if they're doing well, this helps you personally. So that's
yeah,
the pure incentive side. And then I think the other part is on recruiting and the question of what kind of people do you hire. And I have a strong bias for, motivation and also good values over, just pure intelligence and skill, because it takes, it can take one person to drive apart an entire team. If you have one character, and I don't want to say bad character, but if you have one person that has a hard time cooperating, or it's not in their nature, and maybe they're overly competitive, or just, bit of a bully, this can decrease morale to a level where everyone starts showing their non-cooperative sides.
yeah.
So in my interviewing process, I look out a lot for this. And you don't catch everything in an interview. So we have 6 months probation. And if I saw somebody behaving in that way, then it would be over very, very quickly.
Mm. So how do you try and catch that in an interview?
I think
Yeah. Okay. Yeah.
Future
People
employees
might be watching and
might be
gamifying it.
listening, but I can answer it in a general way. I think a first round interview is usually an interview where both sides get to know one another. So I
Yeah.
actually don't like putting people on the spot because I'm selling myself as much and I'm selling
Yeah.
the company as much
Yeah.
as the other person is selling themselves. So I think first round interviews are really just a very soft get to know one another and like feel the vibe and creating a comfortable atmosphere for both sides to really share what they want to achieve. So I think those tend to be about motivation, goals, ambitions, dreams, and really soft topics. But then in the further rounds, obviously we do put people to tests, and we also put people to tests that are too difficult to pass. And I think when they're in a situation where they have the feeling that they failed, it's very interesting to see how people then react,
Yeah.
especially for a trader, right? Like, do you get super defensive? Do you find excuses? Do you tend to blame others?
Yeah.
Or do you take on an intellectual challenge? Maybe you have even a bit fun in your failure, and you have some sportsmanship around that.
Yeah.
And that's often a good indicator of how people react under stress, which just
Yeah.
happens on any trading floor.
Yeah. No, it's important. And it's important to test people. Like what I've seen recently in the market, it's very competitive. So people just, see a good profile and kind of sometimes the decision's made up just because of the names on their CV. And that I've seen some big mistakes being made with that. Like, so especially with technical people, they decide not to test them because they've worked at two companies or three companies that they believe are strong. And they're like, oh, they must be a decent level. So we don't need to
Right.
test them. And they talk a good game and they can say everything that they are surface level that makes them sound strong. But I've had experiences where candidates go into senior roles and then in like 2 months they're like, oh, this guy's not who we thought he was, like skill wise. So my advice is always test because you can get excited by a CV, but it definitely doesn't tell the whole story. And I've seen it happen a couple of times now. Those companies now are like, the process is always we have to test them. Sounds basic, but yeah, it's
Right. I actually
been
think like
overlooked a couple of
hiring, like
times.
what you're doing is a very interesting job. And like we've made like some decisions that haven't worked out with experienced traders. And I think hiring an experienced trader over desk is one of the most difficult things that you can do, because there's always this question as a former trader myself that you have in the back of your mind is like, if you're a good trader and if it's working well, then why would you leave? Like
Yeah,
that's just a tough one when you have an application, and some people have a good reason. But when somebody wants to leave a trading desk, there's like always from my side, like a good piece of skepticism to start with. And when you have people coming through a recruiter, then I mean, the question is like, what do you want? Do you want somebody who trades a market that you're already trading that makes your team stronger? Then I think you have more of a regular interview process. I think in most cases, companies want like, and that includes us, want somebody with experience in a market that they want to open up or in an area that they want to tackle, and the person to just come in, build up
yeah,
something of their own, create P&L very, very quickly. And then everyone comes into an interview and is like, yo, I built this up. Basically, I can create P&L X, Y, Z. And that's very, very difficult to test. And then you only see it when the person is actually there. And then after 2 months, you can tell if this was a bunch of BS or
yeah, yeah,
if there's actually substance behind that. But figuring this out in an interview is just extremely hard to do. And maybe one last sentence on this is like, with the firms that are doing similar things to us, in my mind, I have an unsigned non-compete with them. If I get an application from somebody from a shop like this and they're already out the door, I think it's fine to talk to them. If I get somebody active on their trading floor, I tend not to do it because I feel that they do the same thing the other way around. And I think we are, at least when I look at our inbox for applications, a very attractive firm to work for. And if they were to recruit somebody from us, then I would actively go out and make sure that that pain is felt on the other side as well.
yeah.
So
Okay.
we tend to be quite protective on
Yeah.
that end.
Yeah, no, that you've got to be, haven't you? But yeah, no, it's interesting on that topic. Like, just I think there's certain tasks and business study cases you can get them to do that shows theoretically they know how to come up with a or solve a problem or come up with an algorithm. But yeah, anyway, it's really interesting to get your thoughts on that. Just moving on, like talking about a bit more market focused things. With given the volatility that we have in the European markets and the price swings are extreme and look like they're gonna stay. Everything going on geopolitically. Like it'd be good to just get your views on where we are today and the potential solutions that you guys at FlexPower can offer for the industry. So around
Sure.
like power supply.
Yeah. Well, I would tackle it from two sides, right? So as I said before, we like to talk about it in terms of the upgrid business and the downgrade
Yeah.
business. In terms of the upgrid business, we wrote a small little paper on this. Like it's economically, I don't think super sophisticated, but a lot of people haven't like people that probably listen to this understand the point, but a lot of people outside haven't understood the point that like price levels and volatility are decoupling in a renewables market. The way we measure like intra-product volatility is the high-low spread in any given day. So on the
Yeah.
day ahead, just the difference between the highest and
Yeah.
lowest hour. And then the other thing that people just look at is the base price level, like also on spot. And if you look at these curves, they pretty much moved in lockstep, and there's a reason for that, because in the merit order model, which is just a normal supply and demand pricing model, not something anybody prescribed, by the way. This is purely descriptive, just how commodities markets work. You have like energy crisis is a perfect example. If you have gas prices jumping up, then your highest price on the merit order jumps up. So the space in which prices can move just becomes bigger, and therefore the volatility in that space increases. And this is just the mechanism why volatility and price level tend to move in lockstep, and that remains to be the case, and that will always be the case on some level. But now what has shifted is that supply very often, or where supply meets demand, is at prices of zero, because you have, I don't
Yeah.
know, in Germany, like 40, 50 gigs of renewables, and then you have a demand of 50 gigs, and then your price is zero. So this is the situation of zero prices that's systematically going up. This is pure physics. You just build more renewables, this will happen more often.
Yeah.
And then on the other hand, you have baseload technologies, nuclear, lignite, and so forth, leaving the market. By the way, also, this is often policy driven, but doesn't have to be policy driven, because those
Yeah.
technologies will just leave naturally because they don't have enough production hours to be profitable in the long term. Like the whole nuke discussion, different thing, but you can legalize this all across Europe. Nobody's going to build a nuke. Like, doesn't make any sense. Way too risky and just too expensive. So they're leaving. So you have a supply stack that's smaller, and they operate less hours. So in the moments in winter when you need the most expensive gas plant, they only operate a couple hundred hours a year. So they will
Yeah.
need very high prices to recuperate their investment cost. So the bounce naturally that you have between those zero prices and those very high prices gets bigger and bigger. But the price level overall is actually dropping because renewables have low marginal costs. But naturally, the volatility is increasing, and this will happen in every power market that is based on renewables. And on the
Mm.
upgrade side for the
Mm.
renewables, this is good for us because it takes good traders to manage that volatility,
Yeah.
and we're very good and experienced at doing that. It's very good for the best space because battery makes their money exactly in that area. And it's very good for prop trading because prop trading also likes this kind of volatility. So on the upgrade side, all of this is great. Now, when we move to the downgrade side, it becomes a little bit more tricky because supply customers are not used to handling this kind of volatility. And a lot
Yeah.
of supply customers are in a situation or come from a world where they just buy power at a fixed price and don't have to worry about how and when they operate, right? You just price through, and then power procurement is done. And now we're in a situation where, power prices are quite high in international comparison Grid charges tend to be high. This is more of a political issue, and they'll do something about it. This is something where, well, at FlexPower, we can't help because we don't have any influence on this. We can advise on behind-the-meter solutions and so forth. But given that Russian gas is out, and we're building a system around renewables, we will be looking at base price levels of, I don't know, 70, 80 euros for the years to come. And that's a challenge when you're competing with Australia, Carolina, and so forth, that just, have very cheap natural gas or better renewable resources. So these companies, especially the ones where energy plays a large factor in their cost, have to think about how power procurement works in the future. And the solution that we're offering, or where we're trying to get them, is to become more sophisticated to think about risk and how to structure risk, and which risk do you want on your books and which risk you don't want on your books. And I think for a company that has flexibility and that's still a minority and can react to power prices, you want to have access. Well, maybe you start on a spot price model, but then you want access to intraday power prices, to the very high volatility, to be able to react and maybe ramp up and ramp down production in certain moments. And this is something that we offer. So we take them by the hand and we're like, hey, what flexibilities do you have? We identify them, we value them, and then help them to, make money off of that flexibility, especially like charging stations are a classic example. Like when do you charge your fleet? And some industrial processes can be super flexible. So this is just an area of value where you need a modern trading company that comes to you and helps you doing it. And then the second part is, how do you want to hedge your positions into the future? Because if you have production or offtake agreements for 3 years into the future, and power is an important input factor, then probably you want to hedge your input costs. And the classic thing that everyone used to do and that we also offer is to hedge that with baseload shapes. However, baseload is becoming very expensive because it's quite difficult for a supplier like us to provide a baseload hedge. Obviously, we can buy it on the market, but physically supplying it is difficult in a system where you don't have any baseload technologies, because wind and solar just don't provide baseload power. So you might want to think about hedging with PPAs. And PPAs in Germany have been super slow, idiosyncratic. There's a lot of risk in them. And what we did to take all of this out is we standardized wind and solar shapes that you can hedge like 80% of your overall price risk in a deal that takes like 2 minutes to make, because you can trade wind and solar as standardized as a baseload shape. And with that solution, we offer like off-takers a solution where we identify their risk. We ask them, how much risk do you want? And then we structure them a deal that gives them exactly the kind of risk profile that they're looking for. And all the risk that they're looking to give to us, we put a price on it, and obviously try to be a lot cheaper than the competition.
Super interesting. So your work, is that just in Germany, or will you do that in other parts of Europe as well?
So for now, we are doing this just in Germany, but we can imagine rolling it out. Our parent company, CFP Energy, has a supply business that we're learning from a lot, that is doing very great work in the UK. They're called Brook Green Supply, and they're helping us to learn the supply business better. And so there we have a UK leg. We're building out the Germany leg, but we're already getting a lot of customers left and right from Austria and France asking us if we can do deals there. But our process so far has been to, really go step by step, understand exactly what we're doing, understand exactly the risk position that we're in, how to hedge it, and then we might roll that out into other countries later. But for now, the focus is Germany for sure.
Yeah, which is obviously the biggest market anyway, so that makes sense. So are you looking at things? I'm not an expert in this area, but I know, the buzzwords and what people talk about when they're focused on this. So are you looking at like tolling agreement? Like, is that something that you provide as a solution, or do you structure it differently?
I like that question a lot, because it's actually the perfect example of what we're doing at FlexPower. Let's say a tolling agreement for a battery, right?
Yeah.
Like in the simplest
popular.
way, you rent the asset, give a fixed revenue stream to the asset owner, and then you do all the optimization in the back of this. And ideally, they want a deal over, I don't know, 7 to 10 years or something like this.
Yeah.
Now, if you structure it this way, and we do not structure it this way because we can't, you are left with very few companies that can stand on the other side of this, because taking on this risk for a bigger asset needs a very large balance sheet. And that balance sheet is maybe given by 5 to 10 utilities across Europe. And those utilities, and I don't want to offend anyone, don't tend to be the best at optimizing the assets. So they're not actually taking out the highest value of this. So for a customer's perspective, the more competition you have on the sell side of this, the better your deals and the better your prices are going to be. And the question is, do you want to be in a market where it's just 5 to 10 companies that can do this?
Yeah.
And we want to blow this market open for everyone. And then the question is, well, how do you do that? How do you break a market like this open? And you do it by commoditizing the product. And commoditizing the product for us, for a battery, you first need a proxy value that does the commoditization for you. And the proxy value is for us exactly what I said before. It's essentially the high-low spread. So what does a battery do? Well, it charges in the cheapest hour and it discharges in the most expensive hour. Now, this is just for 1 hour system. You can have a 2 hour system, a 4 hour system. So is this proxy perfect? No. And you're also in ancillary markets where you do a lot more stuff than just this. However, if you model battery revenues over a month or a year and you correlate them with the high-low, it's pretty much a perfect fit. So the fact that the battery does something physically different than actually doing the high-low, it always could do the high-low, means, and that this is a value that everyone can get after the day ahead auction. It makes it super, super transparent, and the correlation is there, so you can use this as a proxy. And that's what we're doing. So essentially, our not only tolling agreement, but also our optimization agreements don't work like the ones from the other guys where it's a revenue share. We actually say, for every megawatt hour that goes out of the battery, we pay you this high-low spread times a multiple, and that multiple depends on the specific asset. However, at the end of the day, you don't have to worry about our performance anymore because all the performance risk is with us, where it should be as a trader. The only thing that you need to worry about is that your battery is functioning and the high-low spread. Now, if you have this as the basis of your contracting model, and now we're looking back to tolling, I can now say, well, the risk that you now have is that this high-low spread becomes super small because, I don't know, gas prices go down, or there's a large capacity market, or they're building 30 gigawatts of BESS. So that's your long-term price risk. And what I can do now is I can say, well, for a certain amount of usage of the battery, we can calculate this super easily. For a certain amount of this, also for 100% if you want, we fix you this high-low spread over a certain term. So I fix you this high-low spread, which is just the fix for floating swap. It's super simple, like settles every day. I can now come in and I can fix you this, essentially giving you a fixed revenue for your bank or a floor price, fully open how much you want to hedge, just like in a PPA. Like you can hedge your full volume or you can only hedge 50% of your volume, completely flexible. And now, and here's the key part, if we structure it on this, I can sell the other leg of this high-low spread to somebody else who can take the risk over a long time. And the question is, who would that be? And the perfect off-taker for that is an industrial customer, because the industrial customer with the renewables hedge has exactly the opposite problem from a battery, because they are scared, and they should be scared, of high volatility. So they're hedging by buying this product. So essentially they're buying a virtual battery, or they're buying the revenue streams from a battery. And on the other hand, you have the battery owner who wants solid financing over 10 years. In that process, you commoditize something that allows you to build a market. And then that allows us to talk to 50 trading desks and ask them for a price. And then suddenly you have competition in the market for flexibility just as a product, and you're not in a situation anymore where just 5 to 10 utilities can price it, but everyone can bid for this. And this is exactly the chain that we're building, and this is exactly how we're thinking about it, how to commoditize and structure risk in a renewables power setup.
That's really interesting. Thanks for breaking that down, because I'm seeing that problem at the moment. Like there's so many companies that want to offer services for battery owners, but then they're kind of locked out because of the balance sheet issues and the risk and the current structures. But these guys have, got some really innovative ways of optimizing batteries. So I think what you're working on here is really important. And can we're going to have a huge impact on the market if it can unlock just outside of those 10 companies that you mentioned.
Right. And like now, so we built this product also by basically the same one for wind and solar PPAs, but I won't go into detail here.
Yeah.
And this was like, I don't know, we sat down with pen and paper and we were like, how should this market be structured? And then we started making those deals on our platform, Power Match. But now this has been picked up by NMAC. So you can now actually trade these shapes on an OTC platform. And so like our hope is that we just have a sort of hub logic for renewables, for flexibility, that where you're trading oil as Texas Brent crude, and you just need this similar standardization for all of these products to create a market around it. And once you've created a market, then you unlock the game outside of the sphere purely of the utilities. There's nothing wrong with the utilities, by the way. Like they're doing what they're supposed to do. But if you unlock this part, then you can have an optimizing agreement that's separate from your long-term hedge, right? You can change your optimizer every year, but you still have that fixed for floating swap that just secures your revenues.
Yeah. And I guess like having that option, that's going to help competition. It's going to push everyone to innovate, push everyone to constantly be better, the performance-driven industry. So that'll help the customer as well, that there's more of an open market.
Right. And that's what you want as a trader, right? You want tradable products. Sure. And for the energy transition as well, like we love the competition. I know some people are going to sit there where there's like originators and structurers who are doing very complex products, and they hate the standardization and commoditization because they're making money in the complexity. And that's fair. Like they're delivering important services that their clients are asking, but we're breaking in there a little bit by saying, hey, let's standardize it, and then everyone can play at this game, and then you have a very competitive market, and then obviously margins are going to go down. But I think that should be the goal actually of any industry, to strive for efficiency.
Yeah. Well, it's if you're here for the energy transition and not just here for the volatility and the profits, like that's what it should be about. Because we want to make Europe competitive on bringing these big industries to Europe, bringing the AI data centers. Then we need cheap, reliable power. And is this a way, do you think, we can help get to that point?
Yeah, for sure. Like, I mean, if you mention data centers, if you listen to US podcasts, it's full of data centers because especially in Texas, you're for the first time in decades, you're seeing real demand growth. And they're thinking about ways to deal with that. I hope this comes to Germany as well. Like obviously we have data center businesses, like as FlexPower, we are this is one of our favorite customer groups. Like we're supplying power to a few data centers. They mostly want baseload at the moment, which is fine. A lot of their concerns are also ESG concerns. So how green is the power? How do you do hourly matching? Like these kind of questions, which we also all tackle, and it's part of the offering. But from a strategic perspective and just from an industry perspective, of course, we want data centers in Europe. If Europe is going to be the hub for data centers, I'm a bit skeptical because, again, like Europe is not the best place for wind and solar in the world. And structurally, there will be places around the world where power is cheaper than in Europe, but there will be growth in that segment 100%. If it leads to a proper US style demand growth, we'll see. I wouldn't allow myself to speculate on this, but I would hope for it. And we should see demand growth anyway from transportation and heating. And I think all of this is picking up, and all of those players will want flexible supply companies that de-risk them in a way that it makes sense for their business.
Yeah, no, absolutely. I think when I speak to US businesses, it's all about AI. Like, how are we going to, the US wants to win that AI war. How are we going to allow the energy to be where it needs to be from a cost perspective and supply perspective to build these huge data centers that need more energy than we've ever seen. And yeah, it's interesting some of the conversations I'm having. Like they're doing, the big tech companies like Meta are just going straight to having their own plant built because they've got the balance
Right.
sheet for that, and they're just like, oh, builders. They're doing deals in across the energy mix because they just need the energy like yesterday. So it is from an origination perspective. They're telling me that some of the deals we've seen in the last 12 months and we're seeing in the next 12 months were never being done 2 years ago. It's just kind of thrown it wide open there. We're not at that point in Europe, but it's just interesting to see, what's going on.
And I think what's super interesting around this, like something that we're pushing for a lot in Europe, what we've seen in the last 10, 15 years or maybe even longer, is decommoditization of power, making it kind of like a consumer product, and you trade it with your neighbor and la la la.
Yeah.
To me, this has never made a lot of sense. Like, you also don't have a purchasing collective for gasoline with your neighbor. Why would you with power? But a lot of people love this space, and this affects the ESG area a lot too. So a lot of businesses that were doing PPAs were doing them to, write nice green things on their website. And I think this is going to break down quite quickly because we're going to be green anyway. This is happening. This is unstoppable. So the benefit of saying that you're green if you have a fully renewable grid just decreases in value. And the second part is that I think we just need to think rationally about prices. Like, we just want reliable power at cheap prices. And when you mention AI, so I mean, you have the one side, AI just as a driver for data centers and demand growth, but then you also have 50 power companies writing AI 20 times on their website because they think it increases their value. And look, like, we have machine learning and AI models on our trading floor, of course. This is just part of any new and modern company. However, AI won't fundamentally change the price of power. It can help you in processes. It can help you have a more efficient dispatch. It can help you use power in more effective ways. But these are all like marginal improvements that you can make. The big problem in power, or what's driving the price, is it's physics. You just need cheap supply on scale. And that's something that you solve with a lot of new assets on the ground. AI will help you around all the processes, but in the end of the day, this remains a physical business, and that's going to be the main factor that drive prices.
Yeah, and I think that's actually it's interesting. A new client of mine told me something similar, that the reason why there's lots of new entrants into the intraday power market is because of the physical aspect of the market, and that's kind of a moat from AI. Whereas a lot of these other trading markets, as they described to me, like they are going to be dominated by AI. So like it's only going to be 5 to 10 companies that can afford the compute power to win in that market. Whereas in this market, because it's always going to have a physical part of it, then there is fundamentals, there is special skills and experience that you need in those markets to perform, which is I think why there's so much attention at the moment, which is interesting the way they describe that. I wasn't thinking about it that way.
I think that's very interesting, and I think it's just, if you think of like trading a stock, right? Like, what's the value that you're trading? You are estimating the possibility of that company to create positive cash flows for the next 20 years or so. Like, not so many things happen from day to day that is going to change that equation, and then there's a lot of market sentiment around it and maybe some numbers that the market reacts to. But essentially, you're always trading the same product on the same curve. In power, you trade 120 products, at least in Germany, 96 quarter hourly and 24 hourly products. And those products have a lifespan of around 36 hours, depending on, well, the particular product. And they're all its own animal. And obviously, like, I don't know, 14Q4 today is related to 14Q4 yesterday. I can learn a little bit about this. I can especially learn something in situations where I had a similar residual load and a similar European market setup. But at the end of the day, it's its own product. And now learning about the price movement in certain situations about this, well, you can find a lot of proxy products, so 14Q4s in the past that you can learn on, or also other products, but you have a very short amount of time that this actual product is traded. And now a lot of things can happen during that time, and all of those things are physical and often very unforeseen. Often they happen at very different price levels than similar situations might have happened at in the past. So training an AI model on this, especially when we talk about continuous intraday trading, is complex for several reasons. One is just bad data quality. So the data engineering around this is super important. Anyone who works on this will tell you the most time that you spend is actually structuring the data in a way that your AI model can learn on this. And then given the fact that also you're streaming so much data from sources that are not 100% reliable and that break, you need to build a lot of safeguards around your models and think about, do I really want to execute in this situation or do I not want to execute in this situation? And in that sense, trading intraday markets with algos and an AI in the background is much more comparable to self-driving cars than it is to a large language model, because a large language model trains on a static set of data for a very long time and then uses this intelligence. Self-driving is like something unforeseen can happen every second, and we're still struggling with that. And now something that doesn't happen so much in self-driving cars, but that's another complexity that's added in short-term markets, is like, let's say an AI in a self-driving car, you drive into your driveway and it learns the shape of the curve, and it learns that, you know, sometimes there are kids playing and sometimes it's raining and sometimes the sun is shining. All of this complexity can be learned. However, the shape of the curve is not really going to change. That's going to stay the same. Now in intraday trading, if you come in with a large position, like I would make the analogy that the speed at which you're driving the car is going to change the shape of the curve, because the market around you reacts to you and to every decision that you make. And it doesn't react in a cooperative way, it reacts in a competitive way. So every time you do something, the system is shifting against you. And building up that complexity in a model with shitty data, with data that breaks, is just a very, very, very difficult problem to solve. And like, do people have profitable AI engines running? Of course, and I'm super impressed. But are we anywhere near of having this market solved by AI? Far from it.
Yeah. No, do you know what? That comparison you just made between driverless cars, I've never heard that comparison, but it does make a lot of sense and shows why it's so hard to do and complex, because we're not even there yet with driverless cars, and we've been
with
talking
the
about
biggest and smartest people in the world working on this problem.
With unlimited resource and money. So
basically,
Elon Musk's been talking about it since 2015, I think, saying it's going to happen next year. It's going to happen next year, and we're still not there. So yeah, that shows how hard that problem is. But Amani, look, I could talk to you all day about these topics.
We went a little bit over, huh?
Yeah, but look, really appreciate your time. It was a conversation I was looking forward to. And I found it really interesting. It's great what you guys are doing. I love the innovations that you're working on and trying to solve the problems in the market. So, yeah, like I say, it's been a while coming for me to try and have this conversation. But yeah, really appreciate it. And yeah, thanks for your time again.
Well, thanks for having me, Patrick. It was a lot of fun, and happy to come back on anytime. And I hope your viewers and listeners enjoy this, learn something. I hope they disagree. Happy, like, write me if you disagree. Those are the most fun conversations to me. And with that, have a nice day, and thanks for your time.
Yeah. And also, if someone is interested as an asset owner in talking to you guys, how should they reach out to you? Are you the person to come to on LinkedIn?
Yeah, like, you can always reach out to me or reach out to the go to the website flex-power.energy. Also, if you're looking for jobs, we are growing. It is competitive, but it is possible.
People that need power, you're based in Hamburg, right? We didn't cover that.
We're sitting here in Hamburg, and as I said, we have a New Zealand office. We're very traditional. We want people to come into the office, except the tech team. They can work from wherever, but the rest is a lively trading floor.
Yeah, amazing. Well, look, thanks again for your time, Amani.
All right. Thank you, Patrick. Have a good day. Bye-bye.